Hello everyone and welcome to Day Trader S&P 500. This is Dale Woodson, editor of Woodson Wave Report, one of Timer Digest's top-ranked stock market timers. And while I've been trading for 30 plus years, I'm relatively new to YouTube, so we appreciate if you guys can hit that subscribe button. Don't forget to hit the reminder bell and the like button. I appreciate you guys patronizing our channel. Also, I wanted to let you guys know that we have, we have our a relatively new day trading service. You can see our track record there. As you can see, I average over 700 trades a year. And recently, we just started our futures trading with Striker Securities. You can see recently there, I traded futures way back in the 90s, oil, corn, soybeans, gold, obviously S&P, the OEX back then, the 100, and treasuries. Anyway, what I'm getting at is if you don't want to sit in front of your computer all day and day trade, Striker Securities is auto trading all of our Woodson Wave Report trade signals. So contact them and they can get you taken care of if you're interested in the trades. In the meantime, we've had some exciting things going on here with the S&P and with Tesla. So let's get into it. A little midweek update here because of what happened today. So here is the S&P daily bar. Okay, we'll just recap here what we're looking at and what we're looking for. From the March lows, we had a 1 up, a 2 down, a 3 up, and a 4 down, and we're looking for a wave 5. Okay, this was a flat correction, A, B, C. The move up above that high confirmed that wave count. So we're really looking at what's going on from this October 30th low. And while we're on that subject, we'll go back to our Fibonacci time spiral, which called all these turning point alternating highs and lows from September to the October 30th lows. You can check out the details there with a slippage of 1 to 3 days. There was a 4 trading day on this B wave high. If this Fibonacci time spiral is going to continue to serve us, it points toward November 30th for the next high. We'll see if it does. Did it wear out its welcome at the 55-day low, or does it predict the next one? We'll see. So we're going to look at the market from this October 30th low and see what's going on. You can see there's we're looking for a 5. Okay. So from that low, I'll label these. Well, let's do the internal wave first for you guys here, because we had a 1, 2, and then we had a 1, 2, 3, 4, 5. You can see the fractals in there. Okay, because that's the third wave. Let me kind of did this a little bit backwards, but I'd like to see the internal wave count first, and we'll make this a larger degree so we're accurate here. We'll make that minute. There you go. So from the October low, we had October 30th a wave 1 up, a wave 2 down, and 3 subdivided. 1, 2, 3, 4, 5. For wave 3 there's a 4, and there's a 5. And that is one wave up from that low. So we need to at least correct that. And this is where we were. You can see the price action here from there. Well, what is all of this? Let me show you what we sent our subscribers yesterday. Here was a bullish wave count and a bearish wave count because they were both in play going into today. So we could have counted this as an ABC correction from that high, that wave 5 high. I recognize those numbers there. And then a 1, 2, 3, 4, and looking at a 5. So what we would need is a move above the all-time high right here to confirm that wave count. That was in play. And wave 2 down was to here, which was just short of the 382 Fibonacci retracement. So here's the bearish count we put out there again as your 5 waves up, and then an A down and a B up and a C down. Here we have where C equals A here and where it's a 1.618. What we needed was a break of this high right here, which is over here. Okay, that would mean that this move down was coming further. So that's what we were looking at going into today, and this is what we got today. we got that confirmation of the bearish count. Okay, so we have an A down and a B up, and this looks like it'll be C down. Okay, so we can do our Fibonacci's on here. Well, let's do the labeling first, guys, if you don't mind. We'll do an A, B, C. Okay, so this would be A, that would be B, and C would be somewhere here. Let me put the lines on for you guys so you can see them. There we go. And, well, they're down, so let's leave it red. I like red down and black up, just like the bars. Okay, so where do we expect this to go? Fibonacci extension. Let's see if we can get pretty accurate here. There's an A, there's a B, and there's a C. So we're looking at 34.94 where C equals A, or 34.11. Is that near where we had it here? Let's look here. Yeah, here we got 34.91 or 34.06. So this is our chart that we put out today. There's the A wave, there's the B wave, and there's the C wave. Okay, so that's what we're looking at, a correction of this 5-wave pattern to the upside. I also want to mention that there's a chance that this is the entire 5th wave from the March lows. Okay, we have to watch that play out. Well, it's more than likely not. Technically, the 5th wave is higher than the 3rd, so it could be. We're going to have to really watch this price action here to see, but it's more than likely going to be equal to 1. So let me move these out of the way. I think we had just under 4,000 what we were looking at. It was 39.96 if I'm not mistaken. I'm going to get these out of the way. It may not come out exactly like that, but we'll see. We'll get an extension here. See if 5 equals 1. And there's 1, and there's 4 low there. So that should give us, yeah, I got 39.94.80, but I think it's actually 39.96. So this 5 here technically could be okay here because it's higher than 3 and it's 5 waves up. It's actually there, but it's more than likely going to go there. We're going to have to really watch this price action here to make sure that it's not there. You don't get caught, because this decline is going to be huge once this 5 waves is complete. Because you can imagine we're going from a low in March of 2191 to 4,000. That's almost 2,000 points and 100%, almost 100. It's a huge move. So it'll be a huge decline. Okay, so that's what we're looking at. Again, here is the expected wave C, and that would be a 2. Okay, so this whole thing, you can see the fractals here. We can get our 5 waves up. Okay, so from here to there is 1 on a larger scale, and then that's a 2, and then we get 3, 4, and 5, obviously up near 4,000. Okay, so that's it on the S&P. We'll watch that closely, but it was a big deal right here when we got that confirmation of the bearish wave count. All right, so we're looking for this to come down. Let's get into Tesla. We have a major development with Tesla today also. Here's our wave count we've shown you guys in the past, going back to the October 2019 lows. We see a clear 5 waves up. What we're looking at here was an A wave down and a B wave up and a C wave down, and we're looking at these corrections here. Obviously, this first correction took us down to 33.33, which is a perfect 382 retracement of this entire move up. We're looking at a possible triangle here. Let me put that in here real quick. Let's get that A, B, C, D, E. Here it is. Let me move 5 out of the way. Well, we'll just go A, B, C, D, E. And yeah, I put that in wrong. Excuse me, guys. Let me do that again. Okay, you get the picture. We're up here with A, B, C, D, E. It's an ascending triangle with a flat top and an ascending bottom. And we were looking at that not being the case, but if this moved up from a throw under on wave E, that would be a 4. and we know we got a 4 here. We'll get to that in a second. Okay, you can see the triangle shape here. Okay, let me draw that, and we'll get another line here. There we go. And there's A, C, and E. And E had a throw under, which is typical in triangles, and then we shot up above here. So right here is where we said, okay, that looks like a 4. So you always know in Elliott wave, where are you wrong? And we were looking for an A, B, C. I don't think we're going to get one. I said if we break above here, we're probably going to break above here. So what is more likely is that wave 3 extended. So this is actually 3, this is 4, and 5 will be at new all-time highs. That looks better. If you look back on here for Elliott waves, we got this 3 and this 4 and this 5. Whoops, let me get that 4 back over here. 4 and 5. See the angle, and look at 5. That's that could be a blow off top, and it looked like it was, but this even has a better look to it. Let me get 4 back over here. Let's get 5 over here, and let's get 3 back here. So the third wave extended. There's a 1, 2, 3, 4, 5. Okay, that's I feel much more confident with that. Okay, so where does 5 go? Let me move these, and I'm doing this for the first time myself, so I don't know where it's going to end up. But we're going to find out, okay, together. So let's see where 5 will equal 1. And let me get that in a little bit. Okay, there's 1. And let's see what 3 did, by the way. Yeah, 3 did a more than 2.618. So let's get on the bottom of 4, which is E right there. Okay, let me remove this. Okay, so this is what we're looking at here. Is 520. The previous high is 503 as I recall, and if it makes a 1.618 multiple, we're looking at 609. So since this was broken today, another major development, S&P and Tesla, then we expect this to be broken. So our revised wave count is thus right here. So nice triangle, ascending triangle, a 5th wave up. And by the way, we got 1, 2, 3. Let's look at this a little closer from that wave 4 bottom, which was on October 30th, just like everything else, of course. Okay, so from that October 30th, and that's right there. I wanted to show you guys this triangle here too. Here's that same triangle from the August high. Okay. Here we've got, we'll give this another look here real quick. That's the top there, August 31st, and that was A, and that was B, and that was C, and that was D, and that was E, and that was our triangle. Okay, so we shot out of this triangle through this throw under, if you will, and we're starting in another 5-wave pattern to the upside. You can see there's a 1, there's a 2, and then there's a 3 and 4 and 5. So let's see what we've got here. Maybe we'll get a little closer look from this October 30th low. Like everything, they're all moving the same. There's our October 30th low. There's 1, there's 2, and there's subdividing 3. Okay, so we can see if we can get that same target over here, which was 520. I'm doing this cold, so we don't know what we're going to get here. We could get 2 different targets, which is okay. But sometimes they end up being the same. There's our 2 down there. That's 3 perfect. There's our 4. Yeah, we have a 506, which could be the top of 3 there still. And then a 4 down, and then a 5 up. Okay, so the 5 here is either at 506 on a 5-minute chart or 551. And on the daily chart, we came up with 520. So right in there, I would say 506 to 520 is the first target. After that, this entire 5-wave advance from the October 2019 low to probably, maybe it'll go November 30th, just like the Fibonacci time spiral, till the almost end of the year in 2020, and then that whole thing will need to be corrected. So we'll get into that once we see the wave 5 high. So that's it. In summary, there's our S&P. There's our target we're expecting in ABC. There's our targets there. And Tesla, we are looking at a move to new all-time highs. Thanks again, everyone. Remember to hit that like and reminder bell. And once again, thank you for watching our channel. I appreciate it very much. Take care, everyone.